Welcome back to the Malaysia Money Matters show. It's the 17th, April 25. Today, we're diving straight into what's shaping your financial landscape, both here in Malaysia and, beyond. We've gathered the latest updates to give you a clear picture. Let's start by unpacking some Malaysian company news.
Sounds good. First up, ASM Automation Group. They specialize in automation machinery, mostly for the food and beverage sector.
Right, F&B.
And they're gearing up for an IPO on the ACE market. Just signed an underwriting agreement with M&A Securities.
Okay, an IPO, so new shares hitting the market.
Exactly. It involves a public issue of, 128.34 million new shares. That's about 24% of the enlarged company, plus an offer for sale of around 53 million existing shares. M&A Securities is underwriting a chunk of those new shares, about 37 million, for the public and eligible folks.
So what's the plan with the funds raised? Where's that money going?
Well, the main goals are to expand their production capacity, get their hands on some more advanced machinery, and importantly, boost their R&D for next-gen automation.
Makes sense. Investing in growth.
Definitely. And they're looking beyond Malaysia, too. Key markets they mentioned include Southeast Asia, India, China, and even parts of Africa. So quite a wide reach planned.
Ambitious. Okay, moving on. What's the news with Affin Bank? They've put out some targets for 2025.
Yeah, they have. Despite all the chatter about global trade uncertainties, they're actually sticking to their key financial targets for 2025.
Which are?
A 6% return on equity, ROE, and 12% loan growth.
12% loan growth seems pretty optimistic, especially with trade worries.
It does, particularly because they anticipate overall banking industry loan growth will likely moderate, maybe down from 6% to 5%. They've also revised Malaysia's GDP growth forecast for 2025 downwards from 5.2% to 4.3%, mainly citing those export sector concerns.
So they're expecting slower national growth, but faster growth for themselves. How exposed are they to these trade issues?
Interestingly, they say their direct exposure to the really vulnerable sectors is quite minimal right now, like 0.6% of their RM72 billion loan book.
Okay.
But they are keeping a close eye on borrowers, obviously. They figure domestic loan growth will be okay, supported by residential construction billings, but maybe a slight pullback in business expansion.
Gotcha. Now, Aurelius Technologies, their shares got a bit of a boost, I heard.
They did. They announced a 2-for-1 bonus share issue, plus a free 1-for-1 warrant.
Okay, break that down. Bonus shares are like freebies.
Essentially, yeah. You get more shares based on what you hold, usually makes the share price adjust downwards proportionally, more accessible, and the warrants give the right to buy more shares later at a set price.
And this raises money.
Potentially, yes. If all the warrants are exercised, it could bring in around RM 463.87 million. That cash is tagged for working capital and, future investments.
How are analysts seeing this? Positive.
Generally positive, yeah. Aurelius is in electronics manufacturing services, EMS. Analysts see them potentially benefiting from trade diversion.
Meaning companies shifting supply chains?
Exactly. Away from maybe China or other areas hit by tariffs. Aurelius has global clients, particularly in IoT and automotive modules, so they might pick up business. Plus, their growth looks solid with expanded production and moving into more advanced stuff.
Interesting angle. Okay, let's look at Bank Rock Yacht. What's their outlook?
They're also bracing for a, challenging 2025, citing the same things. Global economic headwinds, geopolitical tensions, that trade war stuff.
Seems to be a common theme today.
It really is. But despite that caution, they're still aiming for growth. They plan to enter new market segments, increase lending for household spending, and also diversify into some different areas like financing, water utility projects, logistics, even tax-related financing, spreading the risk maybe.
Diversification makes sense. How about the performance last year? Dividends.
For FY 2024, they announced a 17% dividend payout. That's about RM 486 million. It's actually the same percentage as the previous year.
So steady payout shows resilience.
Yeah, reflects sustained profitability. Their profit before tax and zakat actually increased slightly year on year, up about 3.15% to RM 1.82 billion. So they navigated FY 24 okay.
Good for them. Let's talk property trusts. Capital Land Malaysia Trust. How did their first quarter look?
Pretty healthy, actually. Net property income was up 9.6% compared to the same quarter last year.
What drove that?
Higher revenue for most properties, strong retail rental growth. They mentioned positive rental reversions of 12.4%, which is quite strong.
Meaning they're getting higher rents on renewals.
Precisely. And also income from their Glen Marie distribution center, which is apparently fully occupied. Retail occupancy overall was almost 92%, portfolio-wide over 92%.
Solid numbers. And for investors.
Distributable income climbed nearly 11% year-on-year, leading to a distribution per unit of 1.28 sen, up 7.6%. So good news for unit holders.
Okay, now a company making an exit, Golden Land selling off Indonesian units.
Yes, they're disposing of 95% stakes in 2 Indonesian palm oil units. The price tag is RM 151.5 million.
Why the sale?
They cited persistent losses in that plantation segment, so it looks like a move to cut their losses there. They do expect a net gain from the disposal itself, though, around RM 26 million.
And the proceeds.
Mostly to pay down bank borrowings, which will significantly reduce their debt, but also to fund existing property development projects, some remaining plantation capex, and general working capital.
So shifting focus more towards property.
Seems like it. They'll still have some plantations, but this definitely reduces their exposure and frees up cash for property and maybe new asset acquisitions later.
Right. Another asset sale. Hexter Technologies selling a warehouse.
A warehouse and land down in Pasir Gudang, Johor for RM 16 million. They're expecting a net gain of about RM 5 million.
And what's the plan for that cash?
Primarily, they said it's going towards their fintech mobile app, MoneyX, focus on software development and user acquisition.
Interesting. Another tech pivot.
Yeah, seemed to be a trend.
Okay, Hibiscus Petroleum. Their unit, Simpor Hibiscus, secured some financing.
That's right. US $100 million, which is about RM 440 million in Islamic financing. This is from Bank Islam Brunei Darussalam and Biduri Bank.
And it's for?
Supporting expansion in Brunei's oil and gas sector. This comes after they acquired a pretty significant operated interest, 37.5%, in the Maharaja Laila Jamalulam gas field there, so fueling growth in Brunei.
Okay. Less positive news now. Nextgram facing a winding up petition.
Yes, unfortunately. Maybank Islamic served them with a petition over an alleged outstanding amount of RM 1.77 million. It relates to a corporate guarantee for a company that used to be a sub-subsidiary.
That sounds serious. What's Nextgram saying?
They intend to challenge the petition and try to negotiate with Maybank Islamic. But yeah, if they can't defend it successfully, it could potentially lead to operations ceasing. Definitely a situation to watch.
Definitely. On a more positive note, a big joint venture in the pulp sector.
Yeah.
Next Green IOI Pulp.
Yeah, some major development. Next Green IOI Pulp, that's the JV between Next Green Global and IOI Corp, is partnering with a big Chinese firm, Ximen C&D Paper and Pulp Group.
To do what?
To establish a RM 900 million paper pulp plant in Pahang. Huge investment.
Wow. And Xiamen C&D's role.
They're going to be a 100% off-taker for the pulp produced. That's massive guarantees a buyer right from the start.
That de-risks it significantly.
Absolutely. The plant will use NextGreen's patented tech, initial capacity of 150,000 metric tons a year, potentially generating RM 450 million in revenue annually starting 2027. And there's a phase 2 plan to add another 300,000 tons.
Big news for Pahang and the green tech sector. Okay. OCK Group is investing in solar.
Yep. RM 350 million into a large-scale solar photovoltaic power plant up in Kedah. This is through an entity called Solarpack Surya Sungai Petani.
How are they investing?
It involves acquiring redeemable preference shares and a loan novation. Essentially, it boosts OCK's solar generation capacity quite a bit, lets them tap into government renewable energy initiatives too.
And the plant itself?
It's a 116 milliW plant, and it already has a 21-year power purchase agreement, a PPA, with Tenaga Nasional, so secured long-term revenue.
Good move for them. Superior Energy some contract wins.
Yes, some positive news there. Secured multiple contracts worth nearly RM 100 million combined.
For what kind of work?
Offshore support vessels, mainly in Malaysia and Thailand. These are for accommodation workboats and geo-survey vessels. Contracts last up to a year, so it keeps those assets busy.
Good utilization.
Yeah, and they highlighted their vessel uptime was 99% and a strong safety record last year. Good operational points.
Okay. UOA Development, focusing on green financing.
They are. They've partnered with Alliance Bank to offer specific green property financing for their Duo Tower office project in Bangsar South.
So better loan terms for green buildings.
That's the idea. Preferential rates for buildings that meet green certification standards. Duo Tower is actually the first commercial development to get this specific offering from Alliance Bank, encouraging sustainable development.
Good initiative. And finally, on the company front, Affin importing cattle.
That's right, Fraser and Neve Holdings. They received their first batch, about 2,500 dairy heifers, all the way from Chile.
From Chile? That's unusual.
It is. It's Malaysia's largest single import of breeding cattle ever, and the first cattle import from Chile. They're for Affin's big integrated dairy farm in Gias, Nigeria's Sembalin.
And these are special cows.
Apparently so. Genomically tested Holstein cattle, selected for high performance. Looks like a serious push by FNN to boost local fresh milk production.
Very interesting. Okay, let's shift gears now. Time to look at the bigger picture international news and how it might ripple back to us here. China's first quarter GDP growth came in stronger than many expected, right?
It did, yeah, 5.4% year-on-year. Driven by a pretty solid consumption and industrial output. Looks good on the surface.
But there's a but.
There's a big but.
Huh.
Analysts are widely anticipating a sharp cooling off in the coming quarters, the main culprit. Those expected U.S. tariffs are predicted to hit China's exports pretty hard.
So the good start might not last.
That's the concern. Plus, you still have worries lingering over the property sector, unemployment, maybe even deflationary pressures. So yeah, several institutions have already cut their 2025 China GDP forecasts because of these tariff threats, calling it an unprecedented challenge.
Wow. And this tariff impact isn't just China, right? Japan's central bank governor commented.
He did. Bank of Japan Governor Kazuo Ueda didn't mince words. He called President Trump's tariff campaign a bad scenario for the economy.
Strong language from a central banker.
It is. He even hinted it could force a policy response from the BOJ. While they still might raise rates if the economy looks better, his comments suggest they're watching the tariff impact very closely and maybe holding off on any near-term hikes.
Makes sense. And it's hitting companies directly too, particularly chip makers.
Oh, absolutely. Global tech stocks took a hit. Think NVIDIA, ASML. They were down following more evidence of this U.S. trade policy impact.
What specifically happened?
NVIDIA warned it could take a U.S. $5.5 billion hit because of U.S. export restrictions on its AI chips tailored for China. SSML, the big equipment maker, also cast some doubt on its outlook. Other AI-related chip stocks fell too.
So the restrictions are really biting.
Seems so. It's making it much harder for U.S. chip makers to sell into China, which is, a massive market for them. Significant revenue source.
Okay, zooming out again. What are the big global bodies like the UN saying about growth?
Well, the UN Trade and Development Agency, UNCTAD, they're projecting global economic growth could slow quite a bit in 2025, maybe down to 2.3%.
It's a slowdown.
It's a significant one, yeah. Down from the 2.8% they estimated for 2024. They point directly at trade tensions and the sheer level of uncertainty as the main drags. They even warned it could lead towards a, quote, recessionary path.
Recessionary path, that's serious.
It is. They highlighted risks of severe disruptions to trade flows from all these restrictive measures and the whole geoeconomic confrontation thing. Policy uncertainty, they say, is the highest this century. Companies are delaying investment, hiring. You know the drill.
Yeah. And the World Trade Organization, the WTO, are they seeing the same thing?
Pretty much. They've slashed their forecast for merchandise trade this year, slashed it significantly. They now expect a decline of 0.2% in 2025.
A decline. Wow, what was the previous forecast?
It's almost 3 percentage points lower than what they expected earlier. That's a huge revision downwards. They blame soaring U.S. tariffs and broad uncertainty.
And they warned it could get worse.
Yes, they warned further increases in reciprocal tariffs could lead to a 1.5% decline in trade. They see North American trade being hit hardest, and China's disrupted trade with the U.S. might mean more competition for everyone else in third markets.
Not a pretty picture globally. Okay, let's link this to some political developments. Our prime minister has been discussing these tariffs.
Yes, Datuk Seri Anwar Ibrahim discussed the U.S. reciprocal tariffs and their global economic impact in a call with Japan's Prime Minister Shigeru Ishiba.
What was the takeaway?
PM Anwar stressed Malaysia's discussions within ASEAN and the region's general agreement on continuing negotiations with the U.S., so keeping dialogue open. They also touched on cooperation for the ASEAN power grid and new energy, especially hydrogen, involving Petronas and Sarawak.
So regional diplomacy in action. And speaking of international relations, there was a lot of activity between Malaysia and China recently.
A lot of activity. Prime Minister Anwar and Chinese President Xi Jinping witnessed the exchange of, get this, 31 memoranda of understanding and related documents.
31, wow. Covering what sorts of areas?
All sorts. News and information sharing, media collaborations between RTM, FINA's, Burnama, and Chinese counterparts, the Global Security Initiative, development cooperation, mutual visa exemption.
Okay, keep going.
Trade services, upgrading the two countries' twin parks, standardization, railways, joint labs for emerging tech like AI and new materials, the Beidou navigation system, tourism, culture, translation, digital economy, intellectual property.
That is comprehensive. A real deepening of ties across the board.
It certainly signals that, yes, a very broad spectrum of intended cooperation.
And finally, on the political front, back in the U.S., President Trump launched an investigation related to critical minerals.
He did. An investigation into whether tariffs are needed on things like rare earth elements and uranium. The justification given is their importance to national security and the defense industrial base.
How long does this take?
The Commerce Secretary has 270 days to report back. If tariffs are imposed, they'd replace the current reciprocal duties on those items.
Part of a bigger pattern.
Seems like it. Follows other sector-specific tariff actions and investigations, like into semiconductors and pharmaceuticals. The stated goal is reducing U.S. reliance on foreign imports, especially from China, in these strategic areas.
All right, so wrapping up today's deep dive, there's been a lot to cover. Looking back, that flurry of agreements between Malaysia and China really seems significant, doesn't it?
It really does. The sheer breadth of it, like we just discussed. Media, security, tech, trade. It points towards potentially quite a substantial long-term impact on Malaysia's economy and technological direction.
What part of that increased collaboration do you think holds the most potential? What jumps out as most exciting?
For me, it's probably the potential in those high-tech areas, the joint labs, the AI, new materials, the digital economy focus. If those partnerships genuinely foster innovation and knowledge transfer, that could be, quite transformative for Malaysia. Plus, the Beidou system integration, the Twin Parks upgrade, it signals a more integrated future.
Yeah, lots of potential there. On the flip side, though, we have those concerning global reports, the UNCTAD and WTO outlooks, driven by trade tensions. That's got to be on everyone's mind.
Absolutely. It's a stark reminder of how interconnected everything is. Slowing global growth, trade disruptions, that inevitably impacts an open economy like Malaysia's.
So the final thought for our listeners today, how do you see these global headwinds, this uncertainty, maybe affecting your own financial decisions or planning going forward? Something to think about.
Definitely food for thought. It probably calls for a bit more caution, maybe revisiting investment strategies, and just staying really informed about how these global shifts are playing out. Adaptability will be key.
Well said. That's all the time we have for today's deep dive into Malaysia Money Matters. We certainly hope this gave you a clearer picture of the key events shaping our financial world. If you found this useful and informative, please do subscribe to the Malaysia Money Matters podcast. We'll be back with more insight soon. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.